I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Tepper, senior financial analyst with Forbes Advisor, a trusted destination for unbiased personal finance advice, news, and reviews to discuss the impact of inflation on Social Security, Medicare, our 401ks, and also the best states for retirement. Taylor, it's great to see you as always. Welcome back to Trade Talks.
Thank you so much. It's great to be here.
All right, you got it. And despite the Federal Reserve's assurances that it's transitory, high inflation has become one of the dominant stories of 2021. How is this impacting retirees and Social Security checks?
So the big news is that the COLA, the cost of living adjustment for Social Security recipients, is going up. It's going up by like a lot. The most since I think 1982 or thereabouts. And that's going to be a huge benefit for people who are living on fixed income, and it will help sort of assuage a lot of the fears and frustrations that people, seniors who aren't working, who are getting Social Security now, they have with higher food prices or higher property taxes because their home prices are going up. They feel that squeeze. So this COLA is going to sort of help them make ends meet. Medicare premiums will probably go up a little bit too, but most people will see, a good jump with the higher COLA. And, with your 401ks and your retirement savings and stuff like that, it's the inflationary moment's been really, really interesting. If you're a homeowner, it's been really good in some ways because your home value has gone up. Although if you want to transition to a bigger house, it makes it somewhat difficult, but at least you're building equity in that asset. Although some things like property taxes and insurance are going up. And for your 401k, right now it seems like stocks are there's still like a good, healthy appetite, even after a little bit of doldrums in the past few months. So that's sort of where we are right now.
Okay, so let's break this down a bit. Will the extra money from Social Security COLA, that can be eaten up by Medicare premiums?
It can. So it's when you're talking about the stuff, you're dealing with averages a lot. So it's hard to know exactly who's going to be hurt by how much, who's going to be gained by how much. It sort of depends on your finances and what you're getting. But for most people, the increase you should get about $90 more with including the COLA, subtracting the Medicare premium increase a month or thereabouts if you're for single people. So for most people, that's going to be like a good trade-off. They're going to see more money and that'll be good. There's a hold harmless provision. So basically, even if your Medicare premium goes up higher than your COLA, you're not going to get less money than you did last year. So people shouldn't worry about that. But for the most part, people are going to get more money each month, and that'll help them, with their everyday expenses.
And the Fed's easy money stance has greatly benefited the stock market over recent years. Will the market face headwinds with the Fed preparing to wind down its emergency measures and starting to deal with high inflation?
I don't think, I think the market is pretty confident about tapering, about buying fewer bonds over the next year or so. The Fed has been very, very explicit in how it talks about it. Before, a few months ago, it was talking about it. Now it's like talking about implementing it. It's all been very meta and beating you over the head about it. So I don't think there should be like a huge investor freak out when tapering actually starts. It's gonna be interesting to see how they deal with interest rates. You've seen interest rates being talked about being risen or jacked up a little bit later into 2022. When that happens, that will be something to really monitor. But I think right now the bigger concern for investors is, will this inflation, the supply chain issues, the energy crisis that's sort of going on in Europe and starting to hit people here with higher heating bills, is that going to sort of lessen demand for goods and companies? That's going to hurt company earnings. And so far, that really hasn't been the case. Banks have done pretty well. Sort of optimism is sort of rising after sort of a bad September and October. Right. So I think investors can expect some volatility. So if you're sort of living on a fixed income, keeping more cash available for you so you don't have to sell stocks if they happen to be low at a certain moment is a really, really good idea. But overall, this isn't sort of a huge freak out moment.
And Forbes Advisor compiled a list that highlights the best states to save for retirement. What categories did you select to determine the list?
So we looked at a whole bunch of categories. We looked at, do the companies in your states have a high degree of employees opting into their employer 401k plans? We look at incomes and home prices and home price appreciation over time. sort of fit taxes, cost of living,
Hmm.
how much money people actually have saved. So we looked at a wide variety of metrics and some metrics that sort of run cross current with each other because we wanted to see how well these states deal with these things. Because if you're, a retiree, if you're someone who's saving for retirement, you may love the fact that your house has gotten more expensive and maybe you've gotten a raise recently, but if taxes are really high, that sort of eats into your bottom line. So you need to sort of account for everything to get a good picture of how easy it is for a particular person to save for retirement in a particular state. And we sort of netted that out and added some weightings to it and came up with some final results. And everyone in New Hampshire should be really
I
happy.
know, and I was just going to say that as someone who lives in New Jersey, we had some things that were good, but we also had a lot of things that were not so good. So I thought it was interesting the different categories that you selected to paint this complete picture. So, what were the top states? New Hampshire was one, and what were some of the ones that were
So
not
North
that good?
Dakota, North Dakota, South Dakota did well. Colorado did well. So Washington did well. So basically, it was dispersed across the country. It wasn't particularly located in one area. And the thing that everyone sort of had in common is that they did well across the metrics. There was no real bad number for them, and they did have some high numbers in some particular metrics, but none of them were like incredible at any particular one. So the most important thing is to have balance. And I think this is something that even someone living in New Jersey can take away because obviously you're not going to move to New Hampshire just because Forbes Advisor came out with this rating. The key takeaway is to become more invested in your retirement savings and sort of how you think about it. And so it's just going to be more difficult for some people in some states than it will be for some people in other states. But the key is to come up with strategies that help you sort of save more. So one of the ones that I really like is basically anytime you get a raise of any kind, save half of it. This is something that put out by the financial planner Michael Kitces. And that way, you're basically, if you're starting off at like $40,000 at earnings, you're starting off in your career, and over time you get up to $70,000. Save that half of that raise, which is about $15,000. It's a really good savings rate, and it's something that's easy to do because you won't sort of have this lifestyle drift, and you won't get accustomed to spending more money. Sort of implementing like limiting principles of how much money you spend and what you're doing to save will do a long way to sort of overcome some obstacles if you live in a high cost state.
Right. All right, Taylor, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.